Hey everyone, welcome back. I hope you're having a great day and thank you so much for joining me in this GameStop daily recap for Friday, September 19th, finishing at a clean 2608, turning down a few cents after hours here. I'm sure we'll just track sideways for the remainder of the after hour session. And this is pushing 80,000 calls in the money on the week, which should be nice for some delivery on that settlement next week. So, what's the options chain looking like going forward? And how is that going to affect us? Also, going through any additional data, the borrow rate, utilization, IV. We also have a shareholder letter from the board from a company, ENVX, which has distributed warrants in dividend form, similar to GameStop, and but a little bit of insight into that as they are talking about potential short squeeze and just transferring money from short sellers into the company and shareholders, right? So that's fairly interesting to give us some additional insight to our GameStop situation. And, then we're going to go through some shenanigans that we've seen on Superstonk today, as well as our technical analysis and readout. So again, welcome. Thank you all so much. Leave a like, drop a comment, subscribe to the channel, but most importantly, kick back, relax, and let's take a look at some options. All right, so on the week, with a finish at 26, with max pain at 24.5, we see nearly 80,000 calls in the money, which is fantastic. Many individuals may decide to exercise those contracts. That's going to be fantastic for settlement next week. We could also see a rolling of those contracts into potentially further out strikes as well as expiries. So very cool. We have a ton of 25s and 26s in the money here for us today, which is awesome. And, setting us up for next week with a pin, maybe 25.8, 26.2, just to kick the week off. Of course, we're going to layer all of this onto our technical analysis as well as, we've got some key levels we're looking for on the 1 day, the upper band of the gap, and then that secondary gap potentially in the works, considering how the options chain is developing. Now, keeping an eye on that day to day as we go. The big trigger here is if we break 28.40, 28.20, that upper band of the gap, and then we have that chase risk to the reoccurring wall of, potentially 29 to 30. So moving forward, the 26, max pain 25, calls are stacked, 26, 27, 28, 30, and even 33 on that upper end, which we seen kind of start to develop just yesterday. Going above and beyond 30 is nice because it looked a little bit like a hard wall. So, October 26, expect 25 to 27 chop, really, unless we can break that 28.2, 28.4 upper band. October 3rd, moving out a little bit, 24.5 max pain, lighter open interest, easier to move if a catalyst hits, and we see a fresh batch of 30s. A 5,000 block of them. Stop it. But it's good to see, right? We like that, and building on what already is a pretty decent chunk of them. We've got a lot of 28s here and those 25s as well. So, we see some 28.5s, 29s maybe build up, and maybe even some 27s to 26s as well. But bit by bit, day by day, strike by strike, expiry by expiry. It doesn't all have to be concentrated to one single area, right? It can kind of be staggered around, which is almost better for us, because then they're not just burning 1 week. They delay settlement 1 week, and then we're back in control again. It's very much we still have to deal with this next week and next week and next week here and there, right? So, without rambling too much, I want to respect everyone's schedules here. October 3rd. Again, easier to move if something happens just because the chain is so light. Moving into October 10th now, we see max pain 23.5. Wide fairway. Over 28 can easily push us into the 30 level mark, which is that secondary gap. Again, we're going to take a look at the technical analysis to close up today's video. And then, not much here, right? So, we're seeing some activity here within the 25s. That could even just be a single position. But the 27s, the 30s are here. And then, even though the week is much lighter, we do see it building, right, from previous weeks. So it's good to keep an eye on it. The 17th is going to be loaded. This is a monthly expiry. We have max pain at 24, which is pretty decent. And, big $30 call wall here. They're going to likely try to defend this, sub 30. They don't, like, that's 50,000 calls here, right? So, ideally, let's just burn that entire strike. We don't want to have these in the money at all if you're a market maker, right? So I would expect a sub 30 pin here, honestly. Moving out, we had some volume here on one of these days as well. I think it was November 21st, actually. So pretty light here, but starting to build. Nothing really worth mentioning, but once we start to get some volume here, like this is 1.3 thousand calls, that's substantial on a date that was, looking pretty light as well, like those other dates were. So, we're going to watch them build up, and that's really good for us, right? So see our runway extend, both in time and strike. That's fantastic. Exactly what we're looking for. And then the leaps, right? This is kind of more important, and actually where we'll, I guess, end our options chain analysis. We don't need to look too far ahead. Max pain here is 20, which is skewed lower. However, I think that's subject to change as that date approaches. And, big $30 node here as well. But these are long dated. So, if we do get a catalyst, this is going to be, like, I get that it acts as resistance in the near term, but with January being so far dated and a few upcoming catalysts here, if we get above 30, these are going to just act as a serious level of support, which we've been walking up. Those 20s were there for a long time now, the 25s really as well. And, now we see these 30s ratcheting up. And, of course, we've got room for 35, 40. And, we'll see how that all goes, at which point, we're still looking for things to roll up. We don't want them to roll up too far, right? Because if you do get a massive call wall, that's resistance, right? And the bigger it is, and the bigger the discrepancy between the last resistance turn support to the new one, the harder it is to clear, right? So we really want to just build up, and that's why you call it a ramp, because it is like a linear increase, which is quite nice. So moving forward, the near term is going to favor that pin and mean revert around 26. If we can clear the upper band of the gap, then we can push to 30, which, we call it a squeeze, but it's only a couple more dollars, right? However, at that point, maybe we can test the upper band of the gap now as support, but more on that in a moment. Technical analysis coming at the end of the video, if you're curious. The borrow rate is, low. Shares available has been reduced, but still kind of around. The rebate is reducing a little bit, which is fine. This isn't really moving as much as I personally had expected it, but again, keeping an eye on it. IV is down. Like, it is so suppressed. 7 percentile rank, 48 on the 30-day, and you had an epiphany in yesterday's video that so when the dividend is out, we get a new options chain, right, where all the old options now include the dividend. The new options don't. They're just like the options are now, or what you've been used to. The liquidity on the old chain is going to be bone dry. That means, a very wide spread. It's going to be hard to buy and sell unless they get pushed in the money, right? Because then, obviously, you're not going to another trader. It's probably the market maker just willing to buy them. Easy peasy, right? The liquidity kind of changes once an option does get in the money favorably. However, it is to be expected that it is a little bit drier, right? And I think that's why the IV is so low, because, big players know this. And then once that new chain comes out, they're going to pile in. We're going to see IV shoot up from this, like, 90-day suppression period, which we've experienced. So that's my read there. Of course, shares available a little bit lower, borrow rates chilling, and utilization here is up as well, which is pretty cool. So moving on to our Enovix shareholder letter from the board, which pertains to a warrant dividend similar to the one GameStop is issuing to all of us. Now, very interesting read. Unfortunately, I can't give you the link to this. My YouTube's not large enough yet, but if you subscribe to the channel, watch some videos, leave a like, we'll get there, and then they'll allow us to share these links going forward. Give this a read. I'm sure someone will paste it in the comments. It's not too long. It'll take you a couple minutes. Just kind of going through, the whole thing, how they're doing it, shorting multitudes of the float, high volume days, along tandem of, negative news, right? Short and distort, classic stuff that we're all aware of, right? And then, kind of describing the mechanics of how we're using the warrants to claw back some of that money, right? So there's another benefit of the warrant dividend in curtailing short sellers that have been problematic to us for 2 years. As of the last NASDAQ short report on, July, there were 44 million shares shorted by individuals and hedge funds who borrowed those shares from shareholders, sold them for cash, and kept the proceeds, assuming the short sellers sold and then borrowed those shares for $10, which, is not relevant to us. They took a bunch of money from the market, right, without owning or investing in the company, right? And now they're going to have to pay back some of that profit by returning them to the real shareholders and or the company if they collect, their borrows and exercise their warrants, right? And then contrary to my opening remarks, the term warrant dividend is perhaps amenable to a one-sentence summary. The warrant dividend rewards shareholders directly for supporting us and rightfully transfers incremental value from short sellers to shareholders, right? Similar to what we hypothesized the bond offerings were doing, kind of allowing them to breathe, right? However, at the same time, transferring that value from their side of the trade to our side of the trade, right? That cash value that GameStop has accumulated. And now we're going to continue doing that with a non-dilutive move because you're retaining your percentage ownership with your exercises, which is great. So you're siphoning from their side of the trade without diluting yourself, which is really quite nice. So again, this will be linked for all of you down below. And then, I seen a couple comments today that we can go through. One's assuming that the DTC can just cash in lieu everybody, which I don't think works. Whenever you see infinite money glitch, people are always supporting their biases, and who doesn't want an infinite money glitch, right? But the reality of it is, they don't get to choose, right? It's a plumbing scenario, and if they were to choose that, then there's escalation. You go into the compliance and what have you. So, cash and lose predefined within your agreement. For fractional shares, if you're entitled to something, you're entitled to something. A broker can't just pay cash instead of delivering the warrant. It's not up to them. They first are forced to go to the market and acquire it. So they can't just say, oh, it's too expensive. We don't want to acquire it. We'll do cash at a lesser value instead. I feel like that's the assumption here and not how the plumbing works. So, it's a lot to familiarize yourself with. It's very niche, confusing. Understandably, a lot of us are getting it wrong, specifically with our biases. However, let's just be careful with those, right? So, another thing I seen to maybe potentially clarify, and again, let me know in the comments below, what am I wrong about? I'm sure I'm spewing mad disinformation, right? However, the CFTC held swap data for some time when the original squeeze happened, right? And I remember, they were pushing it back to October 2025 or something, and I think they even pushed it back before that. And it was just so far into the future, but we're here. However, I think, again, there's a little bit of a misconception here, and I fell victim to this, I believe, originally as well, where, we had it hypothesized that the short interest was hidden in swaps, and then they hid the swap information from us, so we couldn't necessarily point to it. However, we've seen individuals like Richard Newton tracking the swaps, and I was a little bit confused to this. So, they're talking to chatbot about it a little bit here. It's a financial reporting relief, not necessarily an absence of reporting, and then that still is taking place, and that is where the public swap tape is, the real trade data, and where individuals like Richard Newton were grabbing that information from. There was, from what I can understand, a summary of it, which made it much easier to parse that information and sort it. And that is, kind of what's missing, not the data entirely. That's still there. The tape is accessible. So it's just a little bit different, right? No action sounds like no reporting, but there's, it's just, uh, technical jargon, if you will. So again, I could be wrong in this. Let me know in the comments below. And then, talking about our biases here, inescapably, we'd all love to say that, but I don't know. If you've been around, there's been plenty of escaping, right? The thing that threw me here, and I don't want to make this channel into just something that's like, I don't like this, but I love that you're helping GameStop. That's cool. Just some of these assumptions I feel like are dangerous, though. And this one really stood out to me. I don't want to give it too much cadence or time. I'm sure you can see for yourselves. And again, maybe I'm totally out to lunch on this, and these individuals are spot on. But from what I can see, there is a lot of misconceptions at the very best, right? So there's not going to be any fake warrants. We see that so much. GameStop gives out a specific amount to the DTC, well, to computer share, and then to the DTC. There will be no rehypothecation of these warrants, no fake warrants. Again, we're going to have to wait and see. No one 100% knows for sure. But as far as the law and rules state, they'll have to acquire them at the open market. So, you can't just say, oh, these are fake warrants. I made them out of thin air. You've already exercised all your warrants. GameStop says no more exercising, but people still have warrants. That's not going to happen. 1% chance that it does, but if it does, that's massive fraud, right? And something that they don't want to do, right? They would rather close out a losing position than, and this is where the infinite money thing comes into play. They'll just close out a failing position rather than have it repeat into eternity, right? That's not part of their risk management. I guarantee you that much. So let's just be careful of everything, right? Be open to learning, be open to criticism, to new ideas, all of this, right? So again, a few things that I didn't necessarily like. I don't think we necessarily have to go through it all, because we're just going to wait and see. We're going to give them the benefit of the doubt. We're going to wait and see, and we're going to focus on technicals rather than a lot of the hocus pocus hype, if you will. So let me know on that swap data. I think that the tape is still available, and then people have been utilizing it. It's just the sorting of it that's kind of gotten away from us. And again, that's October 6th is right around the corner. When that comes due, are they going to maybe delay it again and obscure it even further? But I think that's the goal: is the data became obscured. It became harder to parse, and therefore was not. Doesn't mean that there's not something within that data. Probably is. It was just maybe a little bit harder to find. And then, the plumbing to all of this, again, is a little bit confusing, but, the idea that they're just going to make fake warrants, or they can just choose to cash in lieu people willy-nilly, is not part of the game. To cash in lieu, it needs to be part of your broker agreement for fractional shares, which GameStop's not even doing. And if they do it, then you're getting it in writing to their compliance office and asking for it to be reversed, which they are legally obligated to do. You're owed this warrant, so you'll get it, as far as I can tell. And then the Enovix thing is pretty cool. Give that a read, which is pretty decent because it's basically the same thing, so we can maybe begin tracking that stock going forward as well. We did our data, and then we did our options chain. Let's get into the meat and potatoes. Oh my gosh. So the other day we had a reversal downwards, right? Yesterday I was like, oh, okay, well, our 30 minutes reversed bearish. This is pretty gross. However, it's kind of a whiplash because it's a shorter time frame, right? And then if, we do reverse, let's look for a retest on the 200, right? We're kind of getting that, right? So that was yesterday after hours. We've seen that. And today, pre-market. We get that test down, and then immediately expands back upwards, which is a good sign, right? And also that reverse flips back. And this is not really why, like, we don't watch it because it's just going to whiplash back and forth. However, you know, that bounce back up off the 200, which we've seen back here, is really good, right? So moving outwards to the 1 hour chart, we see, you know, just consolidating sideways. The 200's catching up, which has now entered the bottom band of the gap, which is kind of my target area for a trend retest as we move out even further to our 4 hour, which is holding the 21 exponential moving average, which is great. I don't expect this to hold forever. I honestly would expect it to break down to the 50. However, the longer we stay elevated, the longer we can consolidate, the faster that the moving averages will catch up for us, right? You know, on our 1 day, we see our 21 almost at the 200, right? So, you know, we're day by day, the retest area that we're targeting is going up in price value, right? So as we track sideways, our retest is also coming up, which makes it not as painful, which is quite nice. So these averages tracking up, our retest doesn't have to go down as far as if we retest it down here, right? I would like to see that retest happen before we go, before a gap fill, right? Because nothing can run forever. However, the consolidation is nice for another leg up. First target, upper band, and then, you know, maybe we'll target that secondary gap here. Bouncing off that consequent encroachment a couple times here, right? That's the 50% mark of the gap that's created. This is an inefficiency in liquidity. Not much here. The bullish breaker block is holding really, really nicely as our averages kind of come through it. And again, you know, our trend retest is looking better. And, you know, we see that here. We see our reversal, and then we see our trend retest, and then we go, right? So again, you know, just kind of looking for that retest before we go, but it might not necessarily happen. We might just go on our own. You know, you could potentially make the argument that a trend retest breaks down and it falls apart, but everything just looks so bullish that I don't think that's part of, you know, the game plan at all. Just like we were kind of targeting a distribution leg, or well, first a manipulation leg off of an AMD pattern where we had accumulation, and then we wanted it to manipulate down before distributing up. But I think it's just so bullish with the warrants that we're not really going to see a lot of downwards pressure, and any downwards pressure that we typically would have seen or expected is just met with consolidation phases, which I'm totally okay with. That's great. Not really much going on here, other than there's so much support on the options chain as well. You know, for the 25s, the 26s. So, you know, if we can get going, it could be the start of something special, right? The market is going wild off the interest rate cuts. Who knows when we'll see a retracement on that? You know, it has to happen sometime, but things looking really good all in all. So, if there's anything that you'd like to incorporate in the videos, please don't hesitate. Thank you all so much for supporting. Check out our other channel, Hello Good Game, where we're playing Magic the Gathering Arena every day, conquering the #1 spot in the world pretty frequently. We try every month, and just having some fun while we wait for our beloved GameStop. And we also, on this channel, do our daily trade recaps, as I'm always in the market, you know, kind of seeing what's moving, just maintaining my awareness, you know, what's the theme, where are things going, as typically GameStop is a little bit boring intraday. Like, you notice we didn't look at it on the 1 minute today because, well, there was nothing to look at here, right? This is just whale teeth for MOAS, low volume shenanigans, not really any structure that you could typically take an entry model off of. However, we still like to become a good trader with entries, with exits, scaling out, doing all of that on the other channel. So, not channel, other video. So stop by, check it out, and maybe you can learn a thing or two. I don't from you. Are you sure? We'll see you guys soon. Have a great day. Take care.